Hello ladies and gentlemen, and welcome back. Well, it doesn't get any bigger than this. Markets around the world are making new lows, and it is pivotal to understand and have a plan for what happens next. Bonds markets are telling us we're going lower. On top of that, almost every single stat is screaming towards potential oversold features, and we're seeing options traders get out of control with the amount of puts that they're entering into the market. Today, we have the stats and we discuss all of those things and what happens next. But specifically, we also want to talk about the 200 simple moving average, a key pivotal zone that in the past has held buyers and demand, and some of the critical levels moving forward for the stock market and in fact, all of the markets around the world. It's going to be a big video. Let's discuss it right now. See you soon. Well, welcome back everybody to the daily show where we talk about stocks, commodities, and cryptos. Obviously, if you like any of those markets, consider subscribing and give the video a thumbs up if you enjoy the content and find value in it. We'll get started with the macro data, then we'll go into some lead indicators, the key levels that we need to be watching in the markets right now, and of course, everything about the options chain moving into October. Retail options. Yes, we know, us. What are we doing? What are we doing in the market? Well, it looks like everyone is freaking out. Nearly $18 billion spent buying put options to open. So that, of course, means that retail traders are getting very fearful. And this is an incredible reading. Look at the GFC. Look at the reading that we're getting in 2022. Just a massive difference there. And it just doesn't go just for retail traders. Large options traders as well are establishing record hedges. Look at that. Wow, that is a record low and it is off the scale. At one point, record buy calls. Now, all of a sudden, it's record hedges in the markets. And what does that tell us? Well, it makes us need to watch some of these big options expirations, especially the third week of October, because what sits there is going to be massive in terms of the amount of puts expiring during that week. Let's talk about some key stats because everything is showing you oversold, oversold, fear, fear, fear. Does that mean we've hit the bottom? Well, it doesn't necessarily mean that yet, and that's the problem. Sometimes you get these indicators, and even though it shows extreme fear, you end up going lower, and you can see here the stats kind of justify that action. Over the next couple of months, we sometimes got a lower potential capitulation in markets, but then 6 and 12 months later, you're getting heavy stats. 100% of the time, whenever we've seen this reading, 12 months later, we've been higher than that point. An interesting stat indeed. The McClellan oscillator, the same kind of thing here. Usually when we get these readings, sometimes we get a little bit of a pickup, but some sneaky traps in the markets over the next 2 to couple of months. And then again, 100% bullish readings over the next 3 months, 6 months, and 1 year reading. That's an interesting stat there. We've got another one here, SP500, the 1500, the RSI day under the 30. When we get this type of thing here, we tend to see, again, some big stats out of the next 6 months and 12 months. So people are panicking on the street, fair enough, but you probably have to have a plan because, yes, these are stats, but they are reading towards fear coming back. Let's have a look at a survey of retail larger investors, and what that is showing us again is maximum fear. We've already brought this up on the channel before, so definitely subscribe if you like this type of content. But the reason we bring this up is because what we saw when we got these readings before is kind of like a little bit of structure forming, and then we actually had a secondary drop to create that absolute capitulation fear. We will be bringing this chart back. Imagine if we get a 70 reading on the bears. That is 70% of people in the survey are bearish. That is that Warren Buffett concept. When fear is in the street, often you want to do the reverse, but maybe not quite yet, if you know what I'm saying, unless the charts really tell us that's the kind of opportunity out there. Small options traders have now stopped speculating on stocks. You're basically seeing this throughout social media. You're just not seeing those same things like would buy this, buy that. This is great. This is great. Look at all these stocks. Everyone's hunkering down and it's all talking about treasuries, bonds. Who would have thought retail would go to this level? We're talking about 4% gains in a year in treasuries. But it's where we all are at now. And you can see this in the stats. So the speculation's gone. That's technically a good thing. and probably a good thing for the economy considering what the Fed wants to do. Social media giving up on big tech. Of course, you can see here only 8% of tweets are bullish. That's the second lowest reading in a decade to do with tech companies. And I'll show you that Wall Street's actually holding tech more than you would think using an indicator a little bit later. And you can see that the ratios are coming off there. Recession warnings, as we know, if you've been watching the channel for long enough, we're still above 50% yield inversion. That shows us that the stats moving forward, this, by the way, this indicator came out about a week ago. So what it's telling us is that you've got to be very careful specifically in these types of mediums. Gold, commodities, they do terribly during this period of time. Be very, very careful of 50% yield inversions and trying to pick bottoms in both of those markets. Conversely, US dollar tends to be still a decent performer over that period. So just remember that, pause it if you wish to look at it. Now, we're coming into the big period. Remember, October the 16th, I believe that's the date, is a vote in China for, of course, the CCP and what happens next with maybe even the lockdowns. If they say, hey, we're not going to do that anymore, we're reversing course, let's just say it happens, it could be a big catalyst. Funnily enough, that catalyst would be pretty close to where we usually see historical October lows. And during the midterm election years, often the beginning of October brings the bull. In fact, it's one of the best months of the year when it comes to midterm election years. And guess what? We are in one of those years. So you've got to be open to that idea. Here is usually the bear market pull downs. Pause the screen if you wish to look at those. And we'll jump over here just to keep an open mind. If you're an investor, if you're a long-term investor, you've got, yes, you may not want to use forward PE ratios. I understand they're not necessarily the best read, but some markets are starting to look relatively speaking, cheap. The Russell 2000 is being valued incredibly lowly, and that's probably because so many stocks in the 2000 potential bankruptcy cases moving forward, unfortunately. But it's well underneath its historical average. You can see it here. And it's just something to keep in mind. So before we get into the charts and the key levels that you need to be watching and the lead indicators, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. And I want to go through some of the features that they added and that they've got here for users out there and for traders and investors. Firstly, just quickly, the news add-on. I really love this. Getting news is important, but at the same time, getting news from reputable sources, guys, can be very good. They've got a great selection here. A lot of them are premium feeds, and you get them as a client of course, Tiger Brokers. Important, premium news. Hey, I wouldn't say no to a freebie. Let's now move over to why I really like the platform though so much, and that is the additional add-ons of being able to add your toolbox of favorite trade windows. You can customize this any way you want, and of course, there's a whole bunch of different customization options. They have taken on some feedback. I believe they're going to possibly add some more in the future. And of course, here we've got options. We've also got level 1, level 2 data. We've got clocks around the world, so you know what time markets are open. But of course, the all-important one has to be the trade charts. Not only do we have a beautiful looking trade chart here, you can add a whole bunch of different indicators and stuff to it, but we have the earnings announcements, the split announcements, and what I want to mention today, which is setting alerts. So you can right click on the screen, set an alert. Do not, in trading, do not be a slave to the charts. You need to set alerts. It's really important. So we could say moves down to, and let's say we want it to break that double top on Tesla. We want a 264 and maybe, I don't know, 20 cents seems to be where the low is. And then we can say only once, or of course once per day or all the time. And we can even write a memo. So maybe I'll write, I'm scared if this happens because, you know, that could mean further decline is occurring, or I'm ready to potentially place a short. So you can press that in, you'll see it appears. You can then edit that if you wish to, and it's a great feature. Don't be a slave to the charts, guys. Make sure you prep, make sure you have all of your levels set. And of course, once you do that, then you can set up the alerts. And if you're not getting one, guess what? You don't have to be too worried because the market's at a non-critical point for your trading system. So remember, for any Australian viewers out there at the moment, there is a special offer. There's other offers also down below in the description box for other members around the world. But Australian guys, if you wish to set up an account before the 30th of September, you get 20 free zip stock. Plus, if you fund with that 1 cent or more, which you get with the 20. You also get another 30 thanks to being a community member of FX Evolution, and that will be applied to your account about a week later, I believe 1 to 2 weeks later after the first 20 is. So guys, if you're interested, definitely check them out. And of course, if you're from Australia, that's up to the 30th of September. It ends, it's over. If you want to do it today. All right, well, let's get into the charts and let's begin with this one. This is one of our favorites. It is the SP 500 stocks above the 200-day moving average. And frankly, it's not getting good. It's going back down to historically very low levels. You can see here, it was one of those indicators that we used and we stacked it with a whole bunch of others to say, okay, maybe we're hitting an extreme point back in June and July. Now it's back down in the same area. Historically, it's been a pretty good level to show that we're close to the lows. But I did want to bring up probably the elephant in the room, which was 2008. You're going to look at that and say, well, what's this doing over here? What's that consolidation? Well, a good way of really seeing this on the charts would be to compare it versus the actual S&P 500 over that period. And what you'll notice is that it hits this level. That was our fear capitulation getting us to that zone. So there we are. We get to this area here. Then what happens is the market does some stuffing around and then completely capitulates, and you can see the indicator just continues to be incredibly oversold in terms of the S&P 500 stocks under or above the 200-day moving average basically is negligible to, almost flatlining on zero. So it doesn't necessarily mean you're on the bottom, but it can say that you're starting to get incredibly oversold, and that indicators are showing that. So it's a good little chart, S5TH on your trading view if you're interested in bringing that one up. The VIX, let's have a look at the volatility. The fear index, still not hitting 35 just yet, so we're not on that maximum fear in terms of the markets just yet. We'll find out whether we do hit those levels in the future. And of course, we are looking for a big kahuna reading. Generally, capitulation comes with a massive level of fear. I like to see like a 40, 45 plus, and that can often coincide with a really extended excess market. Fear, fear, fear. That's all it's about. US 2-year, any changes here? Not really. Still 4.3%. Very sticky inflation. For anyone that doesn't understand, the Fed basically is going to raise rates, and they're going to raise them to around 4.75%. At least this is the current read we have from the market. They're then going to stick the rate for a very long time. In fact, the first rate cut is not expected to occur until potentially December of 2023. And just remember this, guys, we really will not kill inflation until the inflation number comes underneath the federal funds rate and stays under there for a period of time. Until that happens, you haven't killed inflation. So what the market's saying is we're going to have sticky inflation. Things like rent raises and all these types of things are going to be problematic, and we do need to watch this. Some good codes to have on the charts is to understand things like what's going on in basically, 2023, where are we sitting? Here's April, here's September. You can see that basically the exact same rate. Here's December, the possibility of a partial rate cut. And then even into March of 2024 now, look at that spike over the last couple of months. August to now, take a look. It's just gotten so sticky. It's a big problem. Watch the rates. They're going to be important. What's the bond market doing? Well, it's freaking out even more. Bonds falling again. This is the high yield bonds. Remember, when the high yield bonds make a new low, you've got to be very scared for the S&P 500, because we've seen historically high yield bonds basically in front of the market itself. And even some of my lead indicators are starting to get very close to incredible critical zones. Let's have a look at corporate investment grade bonds. Well, they freaked out even more. Look at this, new lows significantly now while the market hasn't done it. So watch out. The bond market hates itself right now. But then there is the treasuries. Now, historically, treasuries are the one that people go into. Historically, treasuries have been the safe haven for American investors. They've usually bought dollars, and they've bought, of course, treasuries. We're not necessarily seeing them pick it up just yet, but we did hit a massive demand over the last 24 hours. Treasuries TLT, the first level was theoretically here. A lot of people like that. We're now pushing heavily down. And just to put this in perspective, treasuries have dropped so significantly that we're down from the peaking of 40, almost 44%. That's wild. Treasuries, 44% down. I bet you if you asked people about that back in 2020, they would think, oh, that's not possible. But here we are on the demand level. Maybe it's start the time to sniff them, see how the market structures here, have the patience to react to it once the things actually settle, and usually you'll see it. The next level will be, heavily in these zones, which is like an 89. Could we get there? You're going to need a very high yield, probably 5.5 to 6% on the yields. Dollar index, this is showing us fear across the board. At the time of this recording, we're seeing futures getting nailed. We've also seen Apple come out. They say Apple ditches iPhone production increase after demand falters. Could that be showing us that demand across the board is weakening, what the Fed wants it to do? That is a new high, guys. So if you're a bear on the DXY, you have to be a patient beaver. You've got to wait for this thing to come back down. You've got to wait for it to break the structure. And on that point, you can say, okay, cool. Now I've seen what I want. And if it pulls back, maybe I want to short it. Do not try to short this beastie right now. It is aggressive and it could be going all the way to 120. Remember, load your big charts on. Even if you're a day trader and scalper, load your big charts on. Be aware of where previous highs are. It looks like it's an inevitable thing that eventually the dollar will try to get that 120. We'll find out whether it can. Why is this? Because gold is looking historically horrible. We, of course, have been very heavy in terms of talking about gold recently. We're not going to stop covering it, but for now, it looks horrible. Rallies are being met by sell demand. That's just how it just looks on these charts. There's very little. Maybe you're in a minor support demand area here, but realistically, the big ones sit in the mid 1500s and then down in the 1400s. You'll notice I have some alerts for when things come in. I'll start putting some little alerts on the charts just so you guys can see where I put these types of things. We didn't quite get to the supply I wanted over the previous session. You'll notice I had it set to 1645. Basically, the market did pull up. It hit the first level of 1640, double rejected. There was a nice little short actually in here. If you'd gotten it, congrats if you did. On the small time frames. Otherwise, for now, gold looks still very weak. And of course, with new dollar index highs, potentially gold may fall through again. So you gotta be careful about that. Oil still hasn't hit the first demand zone of 75. I don't have much to say about it other than that. I want it to down here. And of course, long term, I believe that the demand destruction will force us into a 65. That's my personal opinion. It takes a long time to get there. Obviously, practice your own risk management around that concept. Let's think about Apple. What's going on there? Well, Apple just came out and they said, hey, we don't have that much demand. We're going to not necessarily do iPhone production increases. Could that be the straw that breaks the camel's back? This stock is like the only tech stock along with Tesla that seems to be like, oh, I don't want to fall down. I don't want to make new lows. I'm going to hold the whole market up. Yeah, it really is in this one. And I believe it's because it's the most shorted large stock. Basically, everyone keeps trying to smash Apple. I don't understand why. You should be smashing mid-tier companies and things that give you better reward. This is a good company. It's hard to short it. But do set, alerts under 148. That's going to be an extremely big, important level. The way that the market interacts, whether it goes bang, bang, or it just goes blur and falls through. Do we go back down into these previous demands? 142, 135. Be careful here because when Apple goes, usually the rest of the market tanks with it. Let's load up Tesla, have a quick look at that one because we've been talking about how Tesla seems to be stronger than the others. Here it is, another okay day considering it put on some percentage. It does have this double top potential. Again, we go underneath zones under here, which is the price of around 266. Realistically, if we go under 270 now, we could be in a lot of trouble here on Tesla. Be careful in this stock, guys. If the market falls and you see the SPY actually go to a new low, that is, it drops and realistically crunches itself, I would expect Tesla to get crunched with it, make a new low, and potentially it to be the one that is disproportionately losing more during that period. SMH, so this is the semiconductors. Often you'll want to see semiconductors lead the way, and they do because they're a very aggressive asset. It's more like a growth thing. We're seeing a lot of hold by the street. So while everyone else is kind of freaking out and the SP500 is making new lows and this and that, semiconductors are still holding as best they can. On the 200 weekly moving average. We go over here, XLK, similar story. You can kind of tell that Wall Street is starting to sniff out value in tech stocks, even though everyone's freaking out. Now, that doesn't mean we don't go down to new lows, but it's very interesting that everyone's losing faith in tech. Yet when you look at some of these indicators, look at XLY, consumer discretionary versus staples, all of a sudden, discretionary holding better than staples, not going through that double top pattern here. Yeah, it just shows you that rotation is there. Now, of course, there are some stocks that are against that, but what's happening is some techs are holding a lot better than others. Here's AMD. It fell through the low. You know, where's the next big demand for AMD? It could be 55 to 60. You know, this block down here, there's nothing really holding it up. It would just be the rest of the market. Microsoft, similar, looking for that to get back down to these levels. The trend line from a long time ago. Will it hit it? Be careful out there, guys. Here's the DAX. The DAX is just absolutely getting destroyed. And this is because it's not an attack on tech. You're seeing oil stocks. You're seeing commodities stocks. You're seeing financials, all these other sectors getting wrecked. And this is the interesting bit. It's not just an attack on tech. It's all the rest of the markets. Look at the DAX. It fell through that key level. It is just plowing all the way down. Do we not get any support until 11.5? You know, if 11.5, so if that actually hits and we're hitting a sup on the S&P, it could be a very good technical signal to say, okay, well, let's look for some quick structure here. Maybe that's where the buyers sit. Let's move over to the Nasdaq. You can see at the time of the recording, the thing is freaking out. Basically, we're down 1.45% on the Nasdaq. So it came back to the supply. The SP 500 was actually quite disappointing. It didn't really get that much higher, but we'll go through that in a minute. So here is the previous little bit of supply. And it came back and it tapped it during the session. You can see the little shooting star it made, and it just went bang straight back down to the lows. So it doesn't look like the market wants to go to the new highs. And this is important because now we have phenomenal structure in the future for if the market does do a turnaround. So things like these levels here are going to become important. So setting alerts above these levels, like we did in the example with Tiger Brokers, is going to be one of those key things that you want to be doing on these charts. Setting alerts, being ready, because remember, right now you're on top of it. What if you're not there for the day? If you get an alert on your phone, oh, key level hit, then you can come into the charts and have a look at it. Let's go over to the weekly. We're actually going through the weekly 200 simple moving average here. Next big sups for something like tech don't really appear until we get into something like a 10,700 or 10,800 zone. So that's another 300 and something points away. You know, big problems could be here. Let's move over to the SP 500. Of course, we talked about the 200 simple moving average. The reason why we talk about this one on the S&P, as it has been very, very solid in the past at getting bases somewhere close to it. So we're certainly focused in on this level, and we're very focused in on the 200 as we are focused in on the previous highs here. And like all over this zone, there is real potential for turnaround. So we'll be looking at the heavy structure. Follow us, subscribe. We'll be looking at the structure on the small time frames around this period. Let's take a look at the daily closes. Absolutely crap. I mean, there's nothing else we can say about them. Usually you want to see wicks. Guess what? What is this? This is trash. All the wicks are to the upside, showing us that supply, that is effectively the market, wants to short it. They showed one bullish signal, then went bang straight back into the low. That showed us in the previous session that maybe the bears are a little bit more in control than we thought, and they're pushing it down. Look at this new low formed here on the US 500. This is the futures market. You can see those rejections coming off. I want to just understand the smaller timeframes here. Let's go to the 2 hour. Look at the structure. So in the previous video, we talked about these annoying levels. We obviously talked about that 37.20 zone, and the market tapped it again during the session and just wrecked on it. So this is going to be a critical level. And if we go smaller, let's go 1 hour, you can see that previous one here, that previous spike. So that's probably holding all of the key to the future right there in that spike. So therefore, we'll have to set an alert above that and leave that there for the, we'll set an alert above that and leave that there for the future. So there we go. We've got that one just in case it does happen. And that's because we now have incredible structure on these markets. If the market does this and it takes out 3660 in the next session, again, that's going to be a small time frame bullish signal, so something to look for. But if we end up taking that one in the future, you would think buyers would come back in and demand would be shown from a technical level. You have to be open here. We're at critical zones. Anything can happen. We've, of course, focused in on it. Let's have a look at some options. What's going on with the options this week? Well, we did talk about by the end of the week, potentially we get some form of strong max pain. Maybe we come down, we test the 360, we test the 350 puts. Maybe we then inject a little bit. There's still a lot of open interest here for this week. But remember, it's not a third week expiration. That just helps us get a little bit of an idea. Let's go out here to the 21st and look at the open interest amount already still sitting on that level. So many puts. It's a put fest, guys. 350, 335, 360, 370. It's just puts everywhere. So do remember October, especially the third week. If you're a bullish person, you're kind of hoping for a capitulation now, followed by just puts everywhere all over this strike. Watch the third week expirations everywhere. You want them everywhere, guys. And once you get them everywhere, then you can say, okay, this is all making a lot of sense. That's the type of thing that you want to be focused in on. Capitulation, billions of puts in October, in that turnaround that generally does happen over that period. That's what you're really wanting if you're a bull. Look at the meltdown through crypto. I mean, this is looking pretty crappy. If the stock markets keep falling, expect crypto to really struggle. That was the supply level we talked about in the previous session. It could not get through. It just hit it and just tanked. And next up, if we get underneath the 17.5, it could get pretty bad. You know, I've said it for a while. You know, I'm kind of thinking 9 till 12K is it could be where Bitcoin ends up going to. And of course, I do say by the middle of Feb, I expect it to hopefully have bottomed off. That is, formed it. If it's following a similar seasonal, similar pattern style to what it did in previous crashes. If you haven't already, come follow us over at FX Evolution. Of course, you can follow us on Twitter, follow us on Discord. If you're interested in our advanced scalping masterclass, that is now available. I'm teaching it live, so I'm doing Q&A and a whole bunch of other things. So you can check that out at www.fxevolution.com. It also, remember, there's still some news to come. We've got a whole bunch of annoying FOMC members talking about stuff. Then on top of that, we realistically don't have too much until Friday. Core PCE price index, 8:30 a.m. New York time. Do remember, it's the last couple of days here to get your free stocks. The special offer from Tiger Brokers. If you're an Australian audience member out there, sorry for the rest of the world, but don't worry, there are some other deals in the description down below. Not only will you get 20 free zip, but you'll get an extra 30 as up until the 30th of September if you fund with 1 cent or more. So it's a pretty good deal. That's free stocks for you guys. And I want to say a big thank you to them for sponsoring today's video. And obviously, they're doing a good job. So just remember, the first 20 will be pretty fast into your account. The next 30 will come a few days later. They manually add those to all of the people using the special FX Evolution community code. Thanks so much, guys. We'll see you in the next one. Subscribe, smash the like button, and have a great day. Bye for now.